Good afternoon, everyone. Today is Sunday, November 26th. Welcome to the Stack Sunday prep session where I aim to prepare myself and all of you for the trading week ahead of us. In today's session, I feel like I'm going to cover my main focus as of right now while I'm trading, and that's candle by candle method. I'm getting a lot of questions on how to apply the refined method on entering during candle by candle method, and just a complete walkthrough of it. I feel like that is what's best for me in my review and preparation for trading some fresh price action, on Monday. Starting off, this is Thursday of SPY. I don't want to review this. I will review, why I don't really want to review this. Low volume day. We told everyone you shouldn't be trading these types of days, these half days or holidays, that are cutting into a weekend. Look at the volume, very, very low, and look at the price action, right? Do you want to put your money in that kind of environment? You shouldn't want to, right? Unless you have a problem. So we are reviewing Thursday's price action. Not even a crazy day. I saw that a lot of people, not only some traders in the group, but in the community, were struggling with trading this type of price action. And I will go back and forth on when using candle by candle method. I don't like using it within a range, but you can use it, and there is some forms of merit, but you have to be faster with taking profit, and you have to be very, very mindful and be able to take profit regardless of if it's 10% or if you're trading futures, 1 point, 2 points, stuff like that. So starting off, we have a 5-minute chart from Thursday on SPY. If you want to follow along, we're just looking at from the open to the close, okay? And so 5-minute chart, we'll go back on a 10-minute as well, but this is our kind of standard method when applying candle by candle method. So off of the open, okay, you can kind of see this, like leading into the open, okay, you get a bearish engulfing candle, and you would think that, hey, this is going to dump, right? When price action is setting up like this, you're like, okay, a novice trader think it's going to dump. The smart trader would wait for a candle by candle flip, okay? We just want to take note of who's in control of price action by noting, pivots on every single candle, and whether it's a bearish engulfing or a bullish engulfing candle, and when those occur. Okay, so that's very key. In my opinion, this is a very simple and what was my notes here? Sorry, I just cut through. Very simple method of breaking down price action, especially those who are looking to develop any kind of perception when viewing a chart. Okay, so you can see here you have a bearish engulfing candle, but this following candle cannot close beneath the previous candle low, right? So that's already a sign. A lot of traders, EMA traders would have been buying into that. That's fine. For me, confirmation is everything. I can have the best looking setup, but without confirmation, according to my system, there's no trade, or at least there shouldn't be a trade. That's where I get into a lot of trouble, whether I'm trying to predict price or, preemptively get into something without that confirmation. So you see, okay, that's a sign. That's a good sign. They're not closing below the 20 EMA. They're not closing below the previous candle low. But ideally, what we want to wait for is a bullish engulfing candle, a candle by candle flip. So I need to see one candle close above this candle high, right? Just like we didn't see that continuation for the shorts, not closing beneath this candle low. If it's bullish, or I want a bullish reaction, I need to see the exact opposite, right? A candle closing above a previous candle high. To me, this is a signal of exhaustion. We're going to go over candle by candle flips a bit more, but I just want to get into my approach leading into the open. Why someone would have wanted to go long on this day, and maybe why they should have refrained from being short, okay? So right here, you have your bullish engulfing candle. Okay, so that should lead you into a bullish sentiment. Now, not a chasing one. And maybe you're like, okay, well, I could have just bought off the 5-minute 9 and 20. We're going to break down this whole day where the 5-minute 9 and 20 was not applicable to price action. If you try to take a trade off of it, you most likely took a loss. All right, so that's why it's important to understand trading price action aside from relying on indicators. Okay, so if you get this bullish engulfing candle, I want you, here, I'm going to zoom in a little bit. I want you to draw a little shaded box extending out just to help you visualize this. You guys might see me do this on the stream. This is just to aid me when looking for an entry. I'll draw this box. Okay, the candle opens here. It dipped into this body, right? This is your entry zone, candle by candle. Ideally, you're not always going to get it, but this is where you ideally want to get in. And it's just a pullback. It's just a dip buy, probably on a 1-minute chart or something like that. So, but this will give you lower risk and much higher reward because traders don't want to buy the ugly. Okay? When this is pulling back after opening right here, right there at 454.98, and it pulls back a little bit, that means the candle is red, right? It's bright glowing red at 9:30 in the morning. You're like, I don't want to buy long on that. Okay, but in reality, it's a pullback. You can risk either this previous candle low, okay, this candle with the arrow, right? Or, if it pushes up, mark that as a candle low, set your stop loss according to, your risk parameters. We all have different risk parameters. All right. And that's how you would enter a candle by candle method trade. Now that's just on this example. What if you miss it? Okay, you miss this big candle and you're like, I want to get in candle by candle. Now, just like I told you, later entries dictate quicker profit taking. So if you have a big candle up here and you're asking for price to push higher after missing this kind of initial entry, we can't be greedy is what I'm trying to convey. I don't want you guys to be greedy at this point. Most of the seasoned traders understand that, but I also know that, there's a lot of newer members and traders just newer to trading. So when this candle opens, it just pushes green, right? It just pushes up. So then that means it's developing a green candle. There's no red on this candle at all. So you would just have to base risk off of this candle low, right? Take an entry, maybe you get a little bit higher, right here, a little bit higher, like middle of the candle, but this should be a scalp. This isn't ideally the type of trade that we want, all right? And, I'll explain to you why. Okay, after this large push up, we should be very, I wouldn't say fearful, but we should be aware of our pivot points, all right? So after taking entry prior to this pivot break, if you're looking long after a higher high pivot, it's extremely risky, right? That there's really not much meat left on that bone or, much money left on that trade, in my opinion. Now, we've seen high go higher and low go lower, but we have to be very careful. And just by noting simple, candle by candle method is just support and resistance, micro pivot points by candle. And so if you understand that, you should understand, your 5-minute kind of swing high, swing low, pivot points, higher high, higher low, lower high, lower low. And, the textbook rule is we should not be entering on a higher high break, nor should we be entering on, you can see later, price breaks this pivot low, that's a lower low. What happens under the lower low? A reversal, right? They push it back up higher, ends up a loss for most traders chasing down here. Okay, so I want you to be mindful of these pivot points. You cannot just place, say, hey, I'm taking candle by candle method here just arbitrarily. You will lose money. You will lose trades. This has to have some sort of confluence with it. I like EMAs, but pivot points are a much stronger form of price action reading for me. And that's what we're going to move forward with today. Because if you look the rest of the day here, no, this is Wednesday. My bad, not Thursday. Thank you, 10. Wednesday price action, the EMAs were worthless all day. Okay, so let's go back to the top here. We're just breaking down the entire day here. So when we pushed up after breaking a pivot high, trying to apply candle by candle, maybe you get stopped out, right? How should you get stopped out? If a candle closes below the previous candle low. Now, a lot of times in my review, right, I told you I spend at least an hour every single day, whether it's just on my phone, on my, laptop, whatever. But many times in my review where I'm like, hey, this is where a trader should get stopped out, was actually a great entry in most cases, right? This is just a textbook bearish engulfing candle. We saw the bullish engulfing candle here. Most traders may overlook some of these early forms of price action, but when we can apply them with I would say a form of articulation and being very precise with our entries, it brings great reward. So where the longs are getting stopped out, logically, if the longs are selling, that means a seller or a buyer is turning into a seller, where sellers are likely already present after breaking a pivot high, right? This is not a bullish territory at that point. Even though price pushes higher, I'm not, or I should not be buying after price breaks a pivot high. So I already know this is seller's territory. Buyers are turning into sellers, which is a form of exhaustion, like we reviewed down here. This is a candle by candle flip, right? On a 5-minute chart. This is technically a pretty small time frame, but one of my favorites. And so when the candle by candle method flips, well, look at the other forms of price action. Technically, you have, tweezer top. I'm just going to put TT for tweezer top. I'll save my 5 seconds of time, right? Tweezer top. Okay, price broke over a higher high. This is like some kind of spinning top star formation, right? It's a weak candle, not a strong continuation or bullish candle, of course. And the bearish engulfing. So there's multiple forms of confluence here. How do we get an entry? Okay, so just like I showed you here, if you have a tweezer top and then the candle by candle method flips, draw the body out, look for entry into this body. Now, I'm not one to really set bids very often. I push buttons. I love pushing buttons, or pushing buttons on my phone, whatever. I just like having that control. And so when it pulls back into this candle, right, it could be the middle, could be the bottom portion. I really am looking for the lower 50% half to take my entry. If it starts to just engulf back up, then I know it's a fake out and I should likely stop, right? But this lower 50%, this is where I'm typically entering. So this was prime entry. Hey, opens here, pushes green a little bit. That's a perfect candle by candle method entry for the short, following the candle by candle method flip, right? This bearish engulfing candle. So what does that bring you? All the way down to VWAP, breaking a pivot low. Now, I don't recommend taking pivot low breaks. Candle by candle method, a lot of traders will just try to just say, hey, this is a pivot, I'm going to buy off of it. Trading doesn't work like that, unfortunately. And not many cases, I should say. But after this sell-off, like I said, let's just say, hey, lower 50% right here. I'm just eyeballing it. We would look for a dip into this lower 50% portion of this body of the candle, right? And they gave you entries here, here, here. I mean, you can see in both of these candles, even up here, pushes down, pulls back a little bit into the lower 50% portion of this body. Shorts eat it up. When you are trading this without a bias and just as it's developing live, right? Like you think like, hey, that's a hammer candle, or that's a whatever Dragonfly Doji you want to call it. This is a fake out breakout look. Like it's, I can't chase the short under VWAP, but read the candle by candle method. Read the price action, right? Many times we're trading our thoughts rather than trading the chart right there in front of us. And that's where I got caught up a couple weeks ago. So you know, that looks really bullish, right? Do you really want to chase that short? Like all these kind of thoughts may go through your mind, but just like I was referring to candle by candle method, this was your best entry short if you were going to take it. Okay, long stop out, right? Fake out, breakout. You have the inverted hanging man, inverted hammer. But what happens down here, right? And remember, if you trade with pivots or you understand micro support and resistance, you should know by now, if we don't want to buy higher highs, what's the logic behind that notion? It's because people are selling, people are scaling out up here. This is exit liquidity. Don't be someone else's exit liquidity unless, you know, you can gauge the environment, knowing that you're going to take profit much more quickly. 1 second. I love sun chips. The sour cream and onion ones are the best. So moving forward here, right? Selling off, candle by candle method. I can just visualize this, just like so, right? This would be someone's risk. And they're still in this trade until when, right? This is exactly where the candle by candle method flips. Okay, a bullish engulfing candle. Simple terms, right? But what was the confluences there, right? You can't just say, oh, CBC flip, I need to buy, right? Find your confluences. You have an inverted hammer here. This puzzle piece does not fit. Remember from the early lessons, this inverted hammer would be bearish if it were placed up here, right? If this candle looked like that. That would be an inverted hammer, and that would be a bearish inverted hammer. But instead, we have it at a low, under a lower low. This is actually a sign of seller exhaustion, okay? Most of us understand that. But breaking a pivot, then they print a tweezer bottom with an inverted hanging man or inverted hammer, and the candle by candle method flips. What should you be doing? Immediately, you should be marking out the body of the previous candle and looking for entries within that body, right? Any of these entries, even on the following candle, they bought it up. So if let's say you bought, I don't know, closest, you know, to the money right here is 455. Let's say you bought 455 calls. I don't know what they're, you know, let's say they're $1, right? 90 cents, $1. Okay, but down here at 454.26, that's a little bit higher. Okay, so we moved up and we broke VWAP. That's a 90-cent move or almost $1 move. So with the delta and them going in the money, you probably gain about $50 per contract. So from $1 to $1.50, that's 50% just by taking note of a candle by candle method flip. Now, of course, we should always be mindful of VWAP, right? This is kind of our center point throughout the day. This is where I like to scale and potentially take reversals if we do get a base on it, right? So whenever you break VWAP or you have a large push up, you should be scaling, right? I mean, VWAP breaks. This is a scaling trigger for most professional traders, especially the algorithms. Okay? But right there, and this is a choppy day. Did you get an EMA respect here, right? Did you get an EMA respect here on the sell off? No, like this is a tough day for EMA traders, but not a tough day for those trading raw price action. Okay. If I'm moving too fast, please go ahead and post some questions, and I'll answer them, of course. But I'm just going to continue moving through the day. Okay. So you pushed up here, right? You don't want to be someone else's exit liquidity. You know that it's already, you know, pushed up very far, breaching VWAP, and now you're getting some weaker candles. Now, of course, some, you know, seasoned traders are going to say, hey, this is, you know, a golden zone rejection, right? From high of day to low of day. Some would say, hey, it's a VWAP break. This is where they'd be scaling, or, you know, evening star, tweezer top, spinning top, blah, 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 right? That's what the seasoned traders say. But if you don't know any of that, I want you to just read the candles. Okay, so you can see that the bulls were in control since when? A tweezer bottom. Okay, candle. This is going to be their risk. This is, we don't stop out unless it's a close below the candle low most of the time, or just your max loss or risk for the trade. Okay, so that's the risk. So you know that the bulls are in control, but when we're pushing up, right, what happens? It starts to get a little dicey here. You're not showing as much strength with the bodies closing over the previous body high or engulfing them at least, right? And then you start to see them pushing into the support, the risk of the candle by candle method. You can start to ease into a short thesis, maybe scaling in lightly or something like that, whatever works for you. But the confirmation is key, right? So the moment this closes below the candle low, you can see it right there. Okay, that's the flip. What should we do, right? Immediately, what should we be doing? I'm going to ask House of Stacks, as well as those on Twitch. As soon as we see the CBC flip, what should we be doing? I'll drink some water. Okay, but if you don't have a position at all, what should you do? That's good. Those are good answers. All out, exit if you were in. Okay, potentially thinking short. How would you think short? What would you do? Mark previous body. Thank you. Pink. Boom. Mark previous body. Okay, so this candle closed. This candle's closed, right? Mark the body as the new candle develops. This is the open. If you don't know how candles open, close, right? Like, go do that after this. But I'm not going to do this real quick. Okay, so that's where it opens. It pushes up the candle's green. Not a lot of traders taking shorts are going to buy in a green candle. The novice traders, at least. But this is your prime entry into this body. One, you either risk this candle high. Whoops. You either risk that candle high, or you wait for it to kind of top out. You're not going to get the absolute top of the wick, obviously, but you wait for it to top out, push down a little bit, develop that wick, and then you enter, right? That's where you take entry. This is a choppy day, right? You're not getting much off this. On futures, you're getting a good trade. I mean, that's probably, what is that? 511. That's like 60 cents. So that's, shoot, on ES, what is that? Wednesday. What day is it? 11/22. This ugly day, bro. So if you bought in the body right there, 67 or 68, 67, 68 to 61, 62, 4 or 5 points, I'd take that any day. Yeah, I can do that moving forward. Look, for sure. I mean, look, okay. So this is how, look, I'll just go click by click. All right, so boom. You have that low, mark it. Well, how does the next candle develop? What does this mean to you? What does that mean to you? What did that mean to you up here? Indecision. That's okay, good. Indecision. It's not a sign of strength, right? But what hasn't happened, right? We're thinking, hey, maybe that's going to close it. Hey, it closed at tweezer bottom. Can I just buy? Sure, you can. But if you're trading candle by candle, I want you to be able to wait for that confirmation. Okay? I want you to wait for the confirmation. Yes, the seasoned traders are going to say, hey, that's a higher low. Hey, look, this is a golden zone, blah, 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 right? But candle by candle method, what happens? What is that? What is that? What's this candle? This next one. What does that tell you? Bullish engulfing. That's a CBC flip, right? So it was bearish, and now flip back bullish with a tweezer bottom and a spinning top. Well, damn, what do? We'll mark the body. Okay. Let's see what that does. Next candle. Oh, That's an entry, right? Okay. You don't know. Hasn't broken a pivot. Still good. You could scale out on this pivot break, right? Let's mark that. We'll make it yellow. How long am I going? All right, we're good. Pivot break. Bam. Okay, so let's keep it moving. Okay, look, now we're making some money. Now we're not, right? But what are we doing with our risk? I'm going to make a risk level real quick. Okay, what are we doing with our risk? We entered off this candle, and we won't stop out unless it closed below that. That's the candle by candle method rule, okay? Or your max loss, you know, whether you're risking 20, 30%, whatever. They don't close below it, right? Like you're still in this trade. Even if you moved it up candle by candle by candle or kept your initial risk from your entry, right? What happens? You're still in it. A lot of traders thinking, oh, that looks short, right? This is the lower high. Look at these weak little small body candles, blah, 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 right? And it's just chopping around. Whether you're in futures or you're trading in options, right? Data will affect this. But candle by candle method, you're still in, right? From your initial risk, no real reason to stop. Boom, right? After you break a key pivot, what happens? You should be scaling, right? You should be scaling. Now, if you want to move it up candle by candle by candle, like aggressively, like you have to be aware of the environment, right? Like if price is moving fast, I'm going to move it candle by candle, right? But if you take an entry and you're still getting like small body consolidation, I just keep the initial risk, right? I didn't lose what I had planned to base my risk off of, and it didn't even come close to it, right? Wicked off of it and then pushed back up. Okay, but then what happens? It flips. Okay, let's just read the rest of the day, right? It flips. Sellers would ideally try to pick it up here, but it probably holds at tweezer bottom. They didn't close under the 20. Let's see. Look, I said sellers would ideally pick it up here. Okay. And then bam, pivot low break. Whoops, damn. Hold on, I gotta get the pivot again. All right, this is the next pivot. That's a scale out. Doesn't matter how much money, this or that, it's a scale. Okay, you would be scaling there under 455. You would be scaling more under 455 and more, right? And then what happens? What happens there? Hold on, let's take a. Hold on, let's move this. What happens here? Let me move this out of the way. Right here. Tweezer bottom, okay? And what? What happened on this green candle? A flip. Candle by candle method flip. Okay, so what would you do? Mark the body. What time is it at that point? 12:45. Mark the body. Well, look. Isn't that an entry? Isn't that an entry? Tweezer bottom. So now what's my risk? Right there. As long as it doesn't close beneath it. Okay. Wow. Huh. Wow. You're making money, right? And you can move the stop loss up each 5-minute candle low, or scale out along the way, or just keep your initial risk, whatever. But wow, right? You're still in the trade, hasn't closed beneath the candle low. And looky there, right? Scaling around. This was that key pivot break from earlier. You know sellers were present because they dumped it. I mean, dude, you took it from 454.9. And that's not a huge push up, but you're not taking a loss on a choppy day where EMAs are not respected and you're just trading price, candle by candle. Like, this is what I need you guys to venture towards. You know, I see a lot of people trying to rely on indicators, oscillators, waves, whatever, man. But all of those are derived from reading price action, the candles, what they mean to you. That is, I mean, that was always my main goal. And I'm not sure if that's yours, but being able to, like, I mean, I zoomed out, right? I logged in and my chart was looking like this, and I was like, this looks crazy, right? Like, what am I doing with my life right now? You know, like, if I try to show this to just some person, like, they would be like, what is that? Is that a, you know, a heart rate monitor? And a lot of people trade and still feel that way about candlesticks because they're using indicators or oscillators and they're relying on these. But if you can really break down what price action means and start to venture into, you know, listening to the dialogue between the bulls and the bears, you can take, you know, advantage of this type of price action. I mean, we can go, you know, look at a trend day. I mean, you know, we don't even get these most of the time, right? So let's look at the next day. Like, what? Oh, I took this day. Dude, we dominated this day. You don't remember this? We said 10-minute CBC. That's what I had a 5-minute and a 10-minute chart here on SPY. So I'll go to a 10-minute to show that example, because that was the thesis that day. Yeah, we were killing it on this day. All right, look. Pushes up. Not a true CBC flip, right? But candle by candle, we'll just keep moving it. Doesn't close over, right? Doesn't close over. By candle. By candle. Doesn't close above it, right? So you keep the same risk. Look, some traders would be like, that's a tweezer bottom. That's a hammer candle, right? We're about to rock it. I remember this day very vividly. We made so much money. And then what happened? Bam. Remember that? That was like, I think like 30 points, 40 points on NQ. I took my money, and on ES was like 6. Right? But the candle, you didn't have a single candle close above the previous candle high. And look at your pivot points. Right? Your swing highs and swing lows. There's your high. Okay? Lower low. Lower high. Lower low. Lower high. Lower low. Lower high. Lower low. Lower high, excuse me, and lower low. But traders will try to trade what they deem is a pretty setup, or what they predict or want price to do, and not trade the chart in front of them. That's where they get in trouble. And candle by candle method is just that, right? You're literally reading price action. It's in a very simple sense. Okay, and then what happened, right, the rest of the day? You can review it if you want, but tweezer bottom, bullish engulfing. This is where it gets choppy, right? I do want to review this. Remember, candle by candle is not perfect. There's no system out there that's perfect. You will have, you know, variables and points where you get wicked out. I mean, there's no trader out there right now, even in the group or in the chat right now, that can say that they have never been wicked out. Never. This is a part of the business, okay? Like, you will sell your very valuable position for a loss at points in time. Probably happens every week for the rest of your trading career. That would be ideal, right? Because most of the time it happens more than once a week. So a trader here would be like, hey, that's a CBC flip, right? I'm going to get my entry into the body, ideally the 50% portion, right? Maybe they take entry there, right? Or maybe it's a little higher up here. They're ideally looking for a CBC to maintain, but this would likely stop them out of their position. Would it not? Likely stop them out. That, according to the candle by candle method rules, they should stop out. That is to prevent loss, and because in many cases, right, what's going to happen on a day like that? Lower high, lower low, right, and then a big fat red candle like this for another lower low. That would happen. It's happened before. So we should stop out according to candle by candle method. But you may sit there and as it's developing, thinking like, hey, you know, did I just get wicked out? Did I just lose 20% for no reason? Just read the candle by candle method. What's the problem with the short candle by candle method here? They could not close below the previous candle low, which shows a sign of strength, shows some sign of buying. Okay, then what happens? Tweezer bottom, but you don't have a candle by candle method flip yet. Now you have it. Okay, what do? Try to mark the body and aim to get entry on the next candle. If it dips into the body, it does slightly there. Remember, you're not going to get that perfect entry every time. A lot of times I just take the standard method, which is just by buying after we push off the candle low and develop a lower wick. Okay. But moving forward, candle by candle method, you can see we're not closing below a previous candle low. You're still in that trade. Even though you're late to it, you bought much higher than your initial entry, but you are buying confirmation. Right? Look, you're still in that trade. You're like breaking high of day. Yo, you're super breaking high of day. Look at that. Boom. Where do you get stopped out? On the runners. Remember, you're not going to hold a full position like that. You can. It's probably not a bad idea. But scaling out along the way, right, you broke high a day. That's always a scale out for me. That's orb high. Right here. I'll mark it purple. Right, you broke high a day. That should be a major scale for all longs. Okay, but see, right, how you can correct yourself with that. You took a loss, you might be feeling frustrated, but don't just sit there and say, hey, I took a loss on the long, I'm just going to go short. That never really ends up well, at least consistently. Continue to read price action. And just like I showed you, right, they couldn't close below the previous candle low. They form a tweezer bottom. You don't get the candle by candle method flip until a couple, excuse me, a couple candles later. But it still offers a great trade. So this trumps EMA trading. I'm not gonna like I use them both. I can't say that it trumps it. They both definitely have their pros and cons, right? Like let's go to a trend day, right? Like look at this tie. Like, are your EMAs making you any money? Absolutely not. If anything, they're adding noise to the kind of breakdown of the chart. Right, but with pivot points or at least micro pivots, this is on a 10-minute. You could definitely get some good trades in like that. But let's go to a trend day, right? And then I'll wrap this up shortly. All right, so we're back on a 5-minute chart. Okay, this is where traders get it, they get in trouble on trend days because, like, if we're pushing up like this, what should you be thinking, right? What should you be thinking on a day like that? A big push up, huge rally. You missed it. SPY's ripped $1.50. What do? 30-minute orb. Okay, I think 30-minute orb is right here. It's not perfect, but neither am I. Look for a pullback, right? Okay, there we go. Boom. Look for a pullback. So what should you not do? What should you not do then? If we're looking for a pullback, looking for a continuation, we shouldn't look for a reversal. Thank you, 10. Fire. We should not look for a reversal. Why? There's no lower high confirmation. There's nothing telling me that I should be looking short other than my monkey brain thinking, hey, this has gone up too high. It surely can't go higher. SPY's range is blah, 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 right? And then you take it short when all of the people who are patient and actually reading price action and have experience are looking for a pullback. Don't short the pullback. Okay, if everyone's like, oh man, let me in, let me in, let me in, let me in, and then it starts pulling back and you short it, you're gonna like sit there and freaking hate yourself, right? They're like, oh, and the shorts are like, yeah, we're going down. This is the pullback. This is where you want to buy, right? It's within the EMAs, it's within VWAP or bouncing off of VWAP, right? It's pulled back off the orb high, right? Allowing price to reset on VWAP, which is orb rolls. I'm not gonna go over that right now, though. Okay, then what happens? Right, sure, sellers have candle by candle method. It flips right there. They have it, but then what happens? They can't close below this previous candle low. They can't. Sign of exhaustion, sign of weakness. You then get a tweezer bottom. No CBC flip yet, though. If you're an EMA trader, you're probably already in because you understand that, probability is higher within the EMAs for an entry, right? I love trading EMAs. There's nothing wrong with them. I just use both. So, EMA traders probably already in. CBC flips, right? You'd probably be looking for entry off of that body. See if they give it, right? And they do. They give it very much, right? You buy that whole body up. You'll hear me talking about that. They bought the body. They bought the body. Now what's going on, right? Higher low, higher high. EMAs, 9 is above the 20. EMAs are also above VWAP. Price is above VWAP. Why are we thinking short? We shouldn't be. Put your energy towards the winning side. Okay? Look at that. Candle by candle method brings you up way up there. If you're an EMA trader, you're just going to scale out on pivot breaks. You're going to hold, as long as the 20 is not closed below, typically. Okay? That would probably stop out CBC traders. These are, scalping type of trades. You're going to get stopped out on CBC if you're trading it strictly, right? If you have CBC, you have a great entry and it's pulling back a little bit, nothing's really telling you to stop out unless you're strictly in it for that scalp kind of risk. All right, but look, EMA traders buy it back up because ultimately what happens, you get that bullish engulfing candle, the CBC flip, and then buyers pick it back up, right? Because, they're not selling off. There's just a little pullback, just like we saw on the first pullback right here. All right, so CBC flip, right? And then what happens? The buyers on the candle by candle method pick it back up. Right there. You see how they bought the body? This large lower wick within the body. Then what happens? Right? Little scary, but they're just buying that body, that little area that I shaded right there. That's just what they're buying. They're not closing below it. You would still be fine in your entry. What happens? Ooh, little scary. Who cares, right? We're being afraid. Bam. Higher highs and higher lows prevail. Remember, higher low, higher high, higher low, higher high. Right? Still bullish. EMAs are still above. Okay, so you may be sitting there afraid, but the CBC does not flip. They're just buying the body. Shorts are covering. They're going to push out of their position. Then what happens? Right? And you can see the rest of the day where we ended. Higher high, higher lows. So, I hope that you guys learned something. I hope that this warms you up for the week. I will catch you all tomorrow morning, 8:30 a.m. Eastern. We'll begin the session, go over pre-market prep, trade the market live. I'm still holding myself to that one trade every 15-minute intervals, 9:30, 9:45, 10 a.m., and then I kind of just do whatever after 10. So I hope to see you all there in the stream tomorrow morning, 8:30 a.m., and I hope you guys enjoy the rest of your Sunday. I hope that you guys learned something, and that you can apply this during your back testing this evening. You all should be studying. I want to see the chart review channel just flooded with charts, right? That's what makes us. That's why we're all here, is the chart. So until next time, right? You guys, please enjoy the rest of your day. Get something good to eat. Get something to drink, right? Please stay hydrated with water and get some rest so we can trade our very best tomorrow morning. Okay? Love ya.